Good morning and welcome to another edition of Roadhouse Live. We are live. Today is May 31. This will be the last day of May 2023, Bender. On the last day of May, how do you feel?
What comes next?
Well, this is where it gets interesting. I'm pretty sure June is on deck. Pretty sure.
So if you listen to this show for no other reason besides learning what comes next, it's like, now you know. June 1st follows May 31st. So
it does. It does. There's no way of getting around it. It's like it's one of those things that happens.
It's the one predictable thing that we have. It's like, yeah, we know exactly what's going to happen tomorrow.
The following day is it's going to happen. Whether we're here or not, it's going to happen. So with all that being said, Bender, on this final day of the month, we had the anecdotal sell in May go away. It didn't look like they sold in May. Actually, quite the contrary to sell in May. But it's almost over. So now what? Now what happens? Is there an antidote for June? Spoon in June?
Spoon in June. That's it. There you go. You could start that one.
Spoon in June.
It's like,
you heard it here
first.
Like
if you sold in May and went away in, what was it? I think there's been like 2 years out of the last like 3 or 4 that it's like, if you sold in May and walked away, you were probably trying to spoon in June because you're just sitting there crying about all your positions that you don't have anymore.
I think that's a thing. All right. So global markets were not all that friendly overnight. China down another handful, Japan down a handful. The data coming out of China is not pretty, but we have all the big wigs, important people in China over the next several days, whatever, in order to try to stimulate, some type of business and avoid the word decoupling is a word that nobody necessarily wants to hear. But China is China. China does what China does. And so we're coming into a day today to where we're cooling off a little bit. I think that's what that red candle looks like. That's a cool off candle. Obviously there's levels here below that we're going to play in and around. With the lack of real data that's pumping through, at least domestically for this week, with the debt ceiling pretty much being out of the picture as far as having a negative impact on the markets, it looks like it's a complete and total done deal, no matter how much hemming and hawing. Now we can turn our focus back to Fed speak, which we have a lot of Fed speakers today. We also have Beige Book coming out. So those are some pieces to kind of keep in mind as we go throughout the day. Look, the market has been completely on fire with the AI piece being a massive component on this overall run. We've seen energy lag substantially. But again, with China doing China over there and that data not being great, it's hard to see how that energy trade is going to catch fire unless OPEC comes out and does some stuff, which he's promising ouchies to anybody short. So if you're into ouchies, get short. If you don't like an ouchie, I guess, according to him, don't be short. I don't know. But we are hitting the summer driving months. This is where energy really starts moving for the most part to the upside. So obviously there's some moving pieces there that we need to be aware of, and how that impacts our overall market and how we like to trade it. Let's get into flow. From a flow standpoint, we're seeing more downside activity. We saw a decent amount yesterday, but it's not so dramatic to where you're like, oh my God, the bottom is about to fall out. I think that not necessarily the puts that I saw over the last couple of days that would be bothersome to bull. I think it's more of the calls coming in on the bid, which there were quite a few for Apple, Microsoft, Google. They had quite a few. We saw a lot of these big bets on Nvidia peeling back off just a little bit. Maybe they can go ahead and buy the 500 calls out to January a little bit cheaper. Is maybe what that's kind of looking like in some capacity. VIX up only slightly this morning, and the markets have a little dip. So Bender, we have these levels that you show us every day. I'm pretty sure we're near one of those levels that it's like in a normal circumstance, you're like, you know what, this area through here is not too bad of an area to buy if it holds. If it holds. If.
It's always the if
it holds. Just like over the last month, it's like, we're coming up to resistance. This would be a decent area to get short. It was not. it was not. It was in theory. Theory is only theory. Results are results at the end of the day. So with that being said, you want to walk us through kind of where we are? I know Freeman was talking about a megaphone. I know everybody's been talking about this megaphone, how we touch top and now the bottom is all the way down to zero. So you want to kind of walk us through some of the walk?
I will. And we talked about that trendline resistance yesterday. And as far as areas, the areas we were looking at to get short on Friday, the areas were good. It just, they went through them, right? But it was like, okay, these are high probability spots, and that's what we're looking for. In the area that I tried to get short on Friday, I got stopped out pretty quick.
So and again, look, it's all about timing. It's like you can overshoot support or resistance,
which is what
yeah. And then the next day, it's right back in your sweet spot.
Take a look at this. And this is a 60-minute, and this is only showing regular trading hours. I don't have extended trading hours turned on at the moment. I'm going to turn that on here in a second. But this is the fibs that we were looking at from the low at 40.62 to this high right here at 41.69. Your extensions are here, 42.12. This is the area that I was trying to short, and we ran up to 1618 and just threw it, right? Since running to that 1618, we've pulled back a little bit if you look at these 60-minute candles, right? I'm going to move this to a 15-minute now. A little bit more. These were those boxes that I drew yesterday, right? And this was yesterday's 3 a.m. low. But, and I'll actually turn on extended or electronic trading hours here. So the game plan yesterday, what we talked about was if we broke below this box right here and broke that 3 a.m. low, that we were likely going to come down 42.20, 42.10. We were looking at 42.10, and then ultimately a 4200 test, which we didn't get it yesterday, right? They did that. They decided to do the 4200 test, in fact, 4195-ish overnight. So I'm going to delete this line that says 3 a.m. because we don't need that anymore. I was just showing that was the setup yesterday. That's what we were kind of had our eyes on, right? And I was actually looking for that sort of move yesterday, and it started, but we just couldn't get there. Had this little bounce, and then down to where we're at now, currently just under 41.95, 41.93 half. So this pre-market low, I'll move that. But I left that on here because you can see 2 a.m. that low was formed, and then we took it out here by one tick, got a little bounce, and now we're back down below it. This area, this 41.94, 41.95 area, when I was looking at that yesterday, I was looking at this going, this would be a good area for them to try to bounce it right in here. And maybe this is a scenario where, we've made this low. They made this low in the earlier sessions. We took it out. This shaded area in here is a previous new week opening gap. So I think, if they can reclaim it, maybe that was the goal there, was to take it down under 4,200, take out these previous session, lows there. If they can, I think if they can hold it in this area, say even above 41.85, 41.90, then maybe we don't have to go fill in all this stuff that we left behind below. If we go back to a 60-minute, I mean, you could see Friday's candle, right? Like those up candles on Friday. So as you can imagine, there's a lot of stuff, left back behind from Friday that, you've got. Probably this is the most obvious area right in here.
So how many handles down from where we are now?
To get to that, you're looking at 15 to the top of that. 41.80 would be about 15 handles from here to get to the top of that one. So the other line that I had on here, that's done at 41. I was looking at it's this one right here. 41.50.25, right? That's 44 down from here. Obviously 41.48 has been that magnet number. But just keeping this 41.50 in our sights, because that is still the midpoint for the entire month of May. And every time we get away from it, 41.48 has just been a magnet, right? So, ideally, for this run to continue, we would hold these levels up in here again, 41.85, 41.90. Maybe it comes down and tests 41.80. I wouldn't want to see it much lower than that. If this is going to continue, we ran up through those extensions, right? And if you look at the regular trading hours, you're a lot closer, but extended trading hours, you can see we pushed just through them and then pull back down. So now that we've run that, it's like, okay, how far down do they need to pull this thing back? Well, fit from this most recent move pullback, 50% of that is 41.76 half. So, if it does keep pulling down this direction, 41.76 half would be inside this fair value gap here. And it would be that 50% retracement. Again, I don't know that they give that to us, but if we do find ourselves down there, I would expect that we would see some buying pressure. We would see a bounce in there if it does make it that far down. That's about all I got. Right. I mean, as far as levels, near-term levels above this morning. If we zoom into a 5-minute, you can see this kind of mess of stuff that got left behind. You have a volume imbalance in here. Above 41.98.75, if it can get up through there and hold, then I think it starts to look pretty good. But this, if we bounce into it, this is the area where it's like, okay, you got to, obviously you have 4,200 right in here, but you also have that volume imbalance, and some action left behind. So this is kind of that area where you'd have to really be looking out for sellers to come back in. What do you think? That's all I
got. What do I think?
You're gonna say, well, which way are we going? Well, right now we're going lower.
I don't think that I am. Especially not today, because it's kind of a little bit obvious which way the market kind of wants to go, and I don't
running these.
It's like it's a little bit obvious. It's like that's a double top over there, and that's a sell. And yesterday we had a very organized sell. Then we had a pop that kind of erased all of that sell for the most part. And we effectively, in a lot of ways, we kind of close flat, just depending on what you're looking at. It's like there has to be profit taking here and there. And I think that we could be in the middle without some type of and I put this in quotation marks, catalyst, in the midst of, a profit taking cycle that could be your 41.48. It could be, the 41.80. It could be right here, right now, as far as what's needed for that. But we have noticed that we're in this never ending, just for the lack of a better term, rob Peter to pay Paul, as far as this continuous cycling, as far as sector rotation to rotation to rotation, sometimes not even sector wise, just individual tickers. It's like, so let's sell Amazon and Google and Apple at the open, but pump Microsoft, Nvidia, and Tesla, and then let's go ahead and switch that up. Let's go ahead and fade some of the ones that we pumped, and then repump the the ones that were bottomed out for the day. We've seen so much of that during that run, and everything is fairly equal as far as overall ups. Google is cooled off pretty substantially, and you really struggle with some of these when you're looking at them. It's like, okay, you guys just reported, and it's not as if you reported gangbusters, yet you were just blown out over where you reported. And I think that the catalyst for a lot of that was the AI. And and now it's like you're getting these little articles as far as saying, oh, AI is nothing but a database for plagiarism. Oh, like, no shit. It's like, so then where does IP law come in? Where does copyright law come in? Where does that kind of stuff come in, as far as protecting IP? It's a great question that hasn't been answered. And then you get the the one sentence letter signed by all these CEOs that everybody's reading this morning, as far as saying, oh, AI could be just as bad as nuclear holocaust. And it's like, okay, that's cool, because we buying it over here, why this is happening. So again, look, the market is going to be the market, but we do, after we get these massive runs, there doesn't have to be a necessary catalyst at the downside other than just profit taking. And maybe that's what this is, just a little bit of profit taking, reposition, re-up. I think this is where we have to keep our eyes open to rotation. Because look, it's like, if you follow ES very closely, right?
Yeah.
These charts don't look the same. The Dow does not look the same as the NASDAQ. The ES does not look the same as the Russell. It's like none of this really looks the same. Where in the past, when we've had these moves, everything kind of looks the same. Nothing looks the same right now. everything looks just a little bit different, which again is different territory. So I guess we'll see. You have anything else?
No, no, that's it.
That's it. I love the idea that 4148. It's like maybe we can see Freeman's head explode off of that one. Um, that would be neat. That'd be really neat if we could see that. All right. Let's see. Do we have Sunny? Sunny, you here this morning? No, Mr. Sunshine. Stonkington. Paging to
Hello.
Stonkington.
I'm here. I woke up today. Let's do some.
Did you celebrate actually waking up?
Congratulations.
Oh man, no. I was like, fuck again. But I'm here. I'm awake. Let's look at some stuff. Today we can get into some of the lessons from a Mr. Jesse Livermore, one of the greatest of all time. Crazy story. Took his own life at the end of it. But some interesting stuff and some lessons from him. So here we've got a Spy Weekly, and Mr. Livermore says that around 30% of the time we go up, 30% of the time we go down, and 30% of the time we go sideways. So I didn't take a ton of time on this, but I was just like, all right, let's see if he's right. So I was looking at some of the stuff. All right, we got some nice stretch of green. We've got some red. We've got another nice stretch of green. We've got some sideways in here. And so, like, okay, there might be some truth to this. And if you're thinking, all right, well, we're only going to go down, then you're missing out on 30% of the time where we'd be going up. Or if you're thinking if you're straight bull, you'd be missing out on the times that we go down. And then if we think about this as fractal, this is on top of each other. If we just look at, again, I didn't, go crazy with the time spent on finding this stuff. But if we just I was taking a look at the SPY 5-minute yesterday, it kind of applied to where we're like, all right, we chopped around for a bit, put in the head and shoulders. We had to stretch down. We had to stretch up. So just kind of interesting to see how, you can apply his idea of 30%, 30%, 30% to different times on the clock. The other things that Mr. Livermore was into was he was inspired apparently by some guy that would trade in from the mountains in California. And he's like, how are you able to do this when you're not getting real-time information? This guy was getting price quotes from the newspaper days and days later. And so that was Livermore's signal to focus on time, because the guy's like, well, I can still, I see where the price is going. So that inspired him to focus on time. And then the last one that we'll throw out there is news. He traded in silence alone because he didn't trust the news. And so that was an interesting one. He said, if you're trying to guess the news beforehand, you're going to, how it's going to impact it. You're going to basically be thrown off. His whole thing was you'll find out what the news means once you see it hit the chart. So that was an interesting one, I thought, because, if you were thinking just news the past few months of debt ceiling and banks, and it's like, well, we just went up. It's like the news didn't matter. So that one kind of held relevant.
Well, but we had the Fed step in. We had them, offering liquidity. It's not as if it was just banks failing and standing around. It was banks failing and the system acting in order to save them. So that's a piece of the news also that negated it. We just didn't put enough stock into that negation. But yeah.
Stonkington, just to add on to what you were saying about time, I don't know if you remember me showing this stuff, but real quick, that's a daily chart of the ES. And if you look right here on 617, if I extend that out, and I have a way that I kind of do this ahead of time and then project it out, but if you just split these into thirds, right? It's like 0, 33%, 66%. You know what I mean? These cycles absolutely, you can kind of figure out the cycle timing of it and then split that into thirds. That's how I came up with that when we were talking about, we looked April 18th, we had pinned, and and May 16th. And that was kind of how I came up with that. So good comment. But yeah, this stuff, absolutely. Those patterns exist.
Very nice. Yeah. Time, big factor. Good stuff. Yeah. And with the clocks, even more so these days. Cool. Thank you. All right. Let's jump into the Russell. We have this double top that played out yesterday. Got this line here marked from this candle right here. That's an order block because it tried to do an up close candle. We pushed back down. Currently, it's working as support. So this 4-hour candle has 45 minutes to go. We'll see if it closes above this 1762.80. We've bounced around in our new week opening gap yesterday. We'll see if we have to go check that again. Otherwise, price action in this area is pretty balanced right here. So upside target, be looking for this to get filled in next. So we have room up to what's that 1777.20, and then downside targets. You know, we could see we bounced off this other 4-hour order block line. So we'll see if we have to come down and check this area. But and we're also approaching our lower trend line on the megaphone on the Russell. So if we jump over, let's check out what the NASDAQ is doing. Can see this almost kind of have like a janky inverse or a janky head and shoulders over here with the head and blah. And this is our new week opening gap. This big yellow box is the daily fair value gap that was left behind on the pop. And we can see, you know, we're just still in this big old rising megaphone type thing. Looks a little clearer on a 4-hour. So downside targets, if we have to push down, we can fill in what was left open from the big pop that with this room down to 1430.75. Upside targets, this is still left open, and we've got this order block line from this is basically the midpoint of the wick of this candle, this down close candle right there. So they tried to push it up, so Mr. T would have this one marked up. So if we push back up, I'll be watching the reaction to this line there at 14,533.50. So that's on the NASDAQ. If we look at the individual tickers, we'll jump over to Apple. Apple was on the dark pool list last night. It was getting some hits up here in this 177 area. I dropped the list of dark pools there in the room. So here it's holding up. I'm going to be watching this line 176.55. If we break that below, more downside. I'll be looking next. We've got these dark pools below, and then above, going to be watching this fib here, 178.2. Still in the biggest risingest wedge of all time there on the Apple. We can see, and then the blue boxes are those daily gaps that we were looking at last week. The other one is going to be NVIDIA. NVIDIA got a decent sized dark pool there last night at 401.11, 5.8%, which these days has been kind of rare for NVIDIA. They haven't been stamping it as much with the dark pools. So I'm watching this 395 round number that's sitting on right now. Below that, then we've got this next dark pool here that came in last week, 379.80. So just going to kind of see what we get there on NVIDIA. And that's all I got.
All right, very good. Do you have any thoughts on anything that you're looking at super close today as far as being actionable?
I mean, the flow looked pretty bearish yesterday on the indices. And so I'm going to be kind of looking at what we get there. Let's go back. If we go over to the NASDAQ, yeah, I mean, it's like that head and shoulders type thing. If we throw back on our gaps, so there's the big yellow one. You can see that daily fair. Here's our gap indicator. So yeah, I mean, it looks like the draw would be downside. We'll see what they do with the flow. You know, we saw some puts for today. We saw some puts on SPY for June 30th. So just going to kind of see what we get in the flow. But yeah,
in June, I'm glad you brought that up. That June OPEX, I believe it's the 19th. That looks like a very bearish exploration.
Yeah, just from what I caught yesterday.
So yes, even going back to last week, it's like that 19th has some pretty thick, let's just call them hedges that may ultimately be actionable. That's probably the best way to say it.
Yeah, I'd have to agree. Let's see this trend line here. Looks like it's just kind of riding this line down for the moment. We'll see if this holds. Just gonna kind of keep an eye on that. Yeah, that's all I got.
All right, buddy. Thank you very much, Bender. Thank you very much. You guys have anything else?
No, I was just sitting here looking at what do we got? About 9 minutes. Just to your point, that I was kind of going through comparing, what the I don't think my dog's very happy. All right. I was just going through kind of comparing the Russell, the Dow, the ES, and the NASDAQ. And like we kind of were talking about last week, like NASDAQ just, insane. And you talked about that, a little more as it relates to the AI names and obviously the craziness that is NVIDIA.
Yeah,
and
so
a few of these other names, but
look, we all agree that tech is the future, right? It's like we all agree that tech is what is going to push the next, 5 days, 10 years.
It's a zombie apocalypse, then yeah.
Right, exactly. But even still, tech will probably still be around in some capacity. What becomes interesting in looking at it is like we've had these runs before, like when the whole advent of cloud and that idea, that concept, we had these monster moves, these big moves, but then we returned to the mean, and then all the while people are buying these tech stocks, but they're not buying like things like cereal and stuff like that. Again, return to the mean is something that always takes place. Timing that is damn near impossible. Timing that is impossible. Flow helps, but just waking up one morning and saying, hey, tech has run too far, or on the flip side saying, you know what, the Russell's just beat into the ground, it's got to catch a bid here at some point. They're still hitting 165 puts on IWM relentlessly. And that would be, I believe, a new low putting in at the same time. So we're going to get the rotation. But again, none of these fuckers look the same to my eye. Maybe they do to somebody else's. But they just don't look the same. Thank you for showing that, Bender. Appreciate it.
Yep, no problem.
All right, guys. 6 minutes. We'll see you soon.
In a few.